Welcome to the TPM Social Club. I'm Josh Kovensky, and I'm joined today by Joe Ragazzo. How's it going, Joe?
It's going very well, Josh. Very, very well.
Well,
Today, if you're watching this, it'll be Friday, but today is Thursday when we're recording. So I'm eagerly awaiting Cavs Knicks. The Cavs had one of the worst losses in the history of sports earlier this week. So that's like kind of where my mind is. That's where I'm at spiritually.
all right. Well, are you rooting for the Knicks or who?
The Cavs.
The
Cavs.
Cavs. Okay, yeah, okay, yeah, that's right. Yeah, Cleveland. Um, all right. Well, I guess you're portraying us in New York City, but it's understandable.
Yes.
I Today we have a great guest. It's Layla A. Jones, reporter at TPM, covering finance. It was a really good conversation. And Joe, you are a former Bloomberg finance correspondent and our resident business guy. So I think it was a pretty insightful conversation about the state.
Yeah, it was really, really interesting. I think it's um I always find looking at the economy, there are certain ways to find out like the truth about things, right? There's famously stats don't lie, but people do. And when I worked at Bloomberg for a little bit and I covered treasuries, U.S. treasuries, and I always thought that bonds specifically are kind of like a source of truth. Stocks are based on people's aspirations. They want to get rich. They think like it's based on what might happen in the future and it's aspirational. Bonds are like, I'm protecting myself. Bonds are like, I look at the cold hard facts and I make decisions on what might happen in the future. And I've always kept that. If you look at U.S. treasuries, you can learn a lot about what's going on in the world, where people are at. Um, what I know less of, what I'm less familiar with, is just sort of like economics broken down by demographics and the latest policy decisions being made by the administration and things like that. And talking to Layla, bringing us up to speed on some of this stuff was really, really.
Yeah, I thought she did a really great job about and showing how these policy decisions can just shape people's lives and completely change the market, the distribution of wealth, distribution of income. It was great. And yeah, I think she was really good. So
I would
it's a
say,
great yeah.
I was going to say one other thing is like, I feel like I'm glad that TPM has started covering economics and business more, really, because we hired Layla, because I feel like there's so much economic and business news that exists only siloed in like the economics and business press. And that is not geared towards like helping regular people understanding like what's going on. You kind of need to move outside of those to publications where their objective isn't to help people like, trade. Not there's anything wrong with that, but it's good for financial and economic news to break out of financial and economic press into more mainstream stuff. Well, not mainstream, but like what we do,
Yeah,
political, non-economic.
totally. Because I mean, at the end of the day, these decisions are all political. I mean, that's the
Yes.
key thing, right? It's
Yeah.
political economy. Yeah.
Yeah.
Well, we also wanted to address our episode last week about health and podcasters and conservative influence.
Yeah.
Is that right? Yeah.
Yeah. Well, I saw an article yesterday, or like a study came out about how after Mel Gibson appeared on Joe Rogan's podcast, I forget what year that was, when it happened exactly. Mel Gibson went on Joe Rogan's podcast. He said that he knew someone who cured their cancer with ivermectin, and then there was like this gargantuan increase in the purchases of ivermectin by normal people, presumably because they were trying to cure cancer or whatever. And it just occurred to me that did that whole episode on health, and we didn't really mention Rogan. And I think Rogan kind of exists at like the center of like the nexus of like people who are really consciously actually trying to better themselves and find out about health, and Maha, and like the influencers and like all that stuff. And so you just gotta say he contributes a lot to a lot of what's going on here. I mean,
Totally.
is there even an RFK Jr. without Rogan? I don't know.
Yeah. Is there even a second Trump term without him? It's
Yeah.
like I mean, he's incredibly influential.
Yeah.
But this is, I think the TPM promise is we are not going to try to get you hooked on ivermectin.
Yeah. Right.
That's something we can guarantee our listeners and our readers. So, with that,
Ironically,
yeah.
I have access to ivermectin because my mom owns
Do
a
you?
horse.
Wow.
So she actually uses it like like for the actual purpose of it.
But for deworming the horse, not
Yes.
on herself. Yeah.
Yes, yes, exactly.
Yeah, that's
Yeah.
good that she's not using it. Yeah, but that could be, if we want to do some like real gonzo journalism, we could try ivermectin and see
Yes.
what the
Yeah,
results
I
are.
know where to get it. Yeah.
Yeah, yeah, we'll do it so you don't have to. Um, all right, well, with that, we hope you enjoyed this episode, our interview with Layla Jones. Well, today we're happy to welcome Layla Jones, a reporter for TPM, to the show. Thanks for coming on, Layla. How are you?
I'm good. How are you?
I'm good. Yeah.
Good.
It's great to have you on. Layla covers the economy for us, political economy and politics. And so we're really excited to talk about all of that, which I understand it's a topic I know very little about. So we're hoping that Layla can come here and kind of educate. So I think, Joe, you know more about it than I do, given that you're the businessman.
Yeah, right, yeah, right.
Yeah.
I'm the businessman,
Yeah.
and
The finance guy.
I did cover, bonds at Bloomberg at one point, so,
Oh,
like, I
wow.
know a little bit. Um,
Teach
but I
me.
guess late what was that?
I said you can teach me about that part.
Well, some things, some things. I guess what I wanted to start with quite simply is like there's just like a lot going on, right? Okay, there's you have the war in Iran, which obviously affects like a lot of things. You have the oil prices, the AI boom, whatever you want to call it. Inequality has been a subject for years and years and years. So I'm just curious, like what are you interested in right now? Like, what subjects are you following most closely, um, and sort of why are those interesting to you? Start right there.
Yeah. Yeah, like you said, there's way too much going on all the time. Some of the things that I look at kind of from pretty far away. I think Josh, you're kind of like interested in these things too, with regard to Trump's crypto ventures and this whole big grift that we constantly have going on out loud all the time. Um, but then what I really like to pay attention to at this time, and I really always have, is just kind of like what you mentioned, that constantly growing inequality, how it's growing along racial lines. And I'm really interested in how like the far right is using this kind of coded anti DEI policy to really relegate Black people to like second class citizenship. And they're doing that through like revoking economic equity measures. I think that's really intentional. And then so, like, for example, the other day, I had read this article by Madiba K. Denny on ball and strikes, and it was about the DOJ finding that Yale discriminated against basically white students by admitting too many black students. Basically, is what the article was about. But what jumped out in that, like, jumped off the page was that the DOJ said that Yale used socioeconomic status as one of its criteria for admittance. And the DOJ said that socioeconomic status and admissions consideration is basically a racial proxy. And the reason that was really startling, like actually scary, is because when the Supreme Court was rolling back affirmative action, and conservatives over several years have always said, well, instead of using race, we can use socioeconomic status. That'll be more fair. That will more show that you've actually been harmed in our world, in our society. And now DOJ is saying, well, actually, no, socioeconomic status is a proxy for race. And the reason that scared me is because it's saying we understand that Black people are more likely to be lower economically, but we're also saying there is no structural reason for that. So then the next logical inference is that you belong there. That's where you're supposed to be. You're there because you're Black, and therefore we're not going to use socioeconomic status as a factor as to whether you've been harmed because it's just because of your race. Like that was so blatant to me. It just like jumped. So that was a long answer, but that's really what I'm like looking at and thinking about. There are so many different policies that relate directly back to that, and they're really starting to say things out loud now.
No, that's a really great answer. And I think it's really important to think about how, like you said, like those specific kind of policy decisions and Supreme Court decisions translate into these huge, examples of inequality in the economy. But can you talk more about, like, I mean, like I think Joe said, you've done these great stories on how Black Americans are doing worse off than whites. according to data from the Fed. Just can you just talk more about how does structural racism figure into that? Why do those trends kind of diverge? Like, just I just kind of want to hear more from you. I mean, how does that happen? Like, how does that come to be?
Yeah. So I wrote a piece, I think like last week. The Fed did a economic well-being study, and it does that every year, and where they just basically ask people questions like, are you doing okay? Are you better off financially than you were last year? Do you have $400 if an emergency came up? Do you have a $3,000 savings? Like, just really kind of basic questions to assess how people are doing. And in this study this year, Black people's responses were more negative this year than they had been uh, the year before. And notably, they were more negative in every category or almost every category, even when other racial groups might have had a better feeling about their own status or a more neutral trend. So obviously that jumped out because it shows that the way this economy is going, its sluggishness or if it's declining, whatever you want to say, it's not being felt the same by everyone. Um, and those difference in feelings are not just for socioeconomic class, because obviously we know there are poor people in every group, but they're also being felt specifically by Black people, and it's race specific. Obviously, I think like some of those numbers for Hispanic populations could also be skewed because of the deportation machine and regime and what's happening there. But as to like why these trends are diverging, it's really on purpose. First of all, we have the federal government workforce cuts, which everybody has talked about now, has disproportionately impacted Black people because Black people were more represented in the government, in federal government work, than they are in the world, in the population, in the country. And then this gender economist named, I hope I'm saying her name right, Katika Roy, she had come out with some data that showed that during a time period in 2025, Black women lost more than 300,000 jobs. At the same time, white women, white men, and I think Hispanic people gain jobs. So it was a really specific and pointed policy decision. She contributed that to the federal government cuts, but pointed policy decisions that are harming specifically Black people, and in that case, Black women. You have the attack on DEI. Private companies are trying to bend themselves to appease the president. Therefore, they're dismantling their diversity departments, or they're changing the way they think about hiring and different things like that so they don't get on the wrong side of the government. We're taking away economic opportunity there. So there are just a number of things coming out of Trump's White House specifically that are shielded in wokeness or anti wokeness or whatever they're trying to say, but it is having a direct and really immediate impact on some people. There are a lot of things that folks are saying, we won't feel for another year, another 2 years, maybe by the end of the presidency. But there are some things that we feel right now.
One of the things I wanted to ask you about that was the piece you wrote. It was interesting. I don't know if interesting is the right word because it's depressing, but it seems that like that Black people are objectively doing worse. That's one thing.
Mm-hmm.
But I wondered if other people think they're doing better than they are. So it's like working on two fronts. Like Black people are doing worse, but it's also the case that like white people, because they want to be, if they support Trump, they want to justify that support. They're reporting that they're doing better than they actually are. So is that an accurate like assessment? Like there's two things that there's two factors at play here. One is the objective reality that Black people are doing worse, but the other reality is kind of maybe Trump supporters specifically kind of overstating how well they think they're doing
Mm-hmm.
to kind of satisfy some sort of psychological need to have. So I guess the question is that right? Is that accurate? Is that what's happening?
No, yeah, I've thought about that a lot, and I don't know if it's like right or not as far as like the survey data, but that did come to my mind because with the Fed survey, for example, you're just asking people their opinions on their situation, and there's been data that comes out that shows that people who are doing like pretty well, they always kind of think they're doing worse than they really are because of how their neighbor is doing.
Mm.
So when you ask people like their opinions on their own situation, that can be skewed. Like when you have a question like, "Do you have $400 for an emergency?" That's kind of like that should be
Yeah.
like a yes or no question. But when you have like the question of, "Are you doing okay? Are you living comfortably?" That you can be like, "I'm living better than them, so yeah, I'm doing great." Like,
Yeah.
so yeah,
Right.
I thought about that too. And then our one of my editors, Allegra Kirkland at TPM, she had talked about how with the midterms that just passed, everybody's been talking about affordability, affordability. Like it's a big problem. Obviously, the policies that Trump is passing down from his White House are directly impacting affordability, like the Iran war and this oil crisis that we have now, tariff regime and everything like that. But the Republican candidates that won were largely the ones that he supported. He knocked out two of his political opponents. So it's like, uh, if you can identify affordability as a problem, but you can't really identify where it's coming from because you want to justify your support for Trump, how does that come out in the data? So it's interesting. I don't know. It's something to think about.
Mhm.
Yeah, that is interesting. I mean, it does make me also wonder about. So I think one question a lot of people have right now is why is the market doing so well?
Mm,
I think it kind of may be relevant to what relates to what Joe was saying. Like if you are like a Democrat or you're on the left, you kind of expect everything is horrible, right? Because Trump's in power. Conversely, if you're on the right, you probably think that everything's great. But like it does sort of seem like we have Strait of Hormuz closed, war. We have all this chaos in the government. Like as you have been discussing, in terms of like a lot of people's just like real experience of the economy, it's not great. It's hard to find jobs. So like, why are we in this place where I mean, maybe you don't have an answer. I don't know, but like, why are like what? Because I don't know if anybody does, right? But it's like, but I'm curious, like even just like how you think about answering this question. Like, why are we in this place where like the market is doing so well, but everybody, at least I talk to, seems to think the economy sucks.
Right. Well, first of all, I always like to think about the fact that like the market is not a sentient being. It's like these people behind it who are, I don't want to say pulling the strings and sound like a conspiracy theorist, but they're savvy, educated investors, business owners, hyper wealthy, and they're making decisions that are impacting what's happening, what we're seeing on the ground. So that's the first thing. Secondly, like I listened to this to Marketplace and the Kai Rizdal who hosts that, he always says like the market is not the economy. So that's like a good way to think about it. But I just think there are just two completely different experiences. The market is investing in things like AI and these tech companies. They're relying on the fact that Trump never does what he says he's going to do, taco. And when it comes to Liberation Day, things weren't as bad as they were going to be with the tariffs. So that boosted the market. And he keeps saying the war is kind of going to end. So they keep kind of listening to him, and that's boosting the market. I don't really know why they're listening to him. Obviously, they're not. I really have no idea. I'm not a sophisticated investor. But I know that like a lot of people, a $1.50 jump in gas is not just like an irritant to them. It's actually changing their behaviors. It's impacting other things that they can afford throughout the week. And that's not always borne out in a market where we're excited because like Nvidia reported high quarter 1 2026 earnings or whatever is happening.
The one thing that it seems this is not like a new thing, but it seems like an accelerating trend where I mean to the point that you referenced about the market is not the economy. I feel like that's always been true, but now it's like diverging like more and more and more where it's like stock market performance of like specific shares might literally have nothing to do with the real economy. It's all just sort of financial manipulation, managing managing the regulatory environment that enables you to kind of like run a business with no competitors because you have a monopoly of a business that people need to pay you for. So it doesn't really matter if like you have a good product or a good service. People need you, and you've kind of just like insulated yourself from any kind of downturn. Like what does it matter if the economy is like really bad if you're a health insurance provider or if you are an airline. Like, you're just going to raise prices. People are going to need to fly. Like, you might do a little bit worse, but you'll figure it out in the long run. And that's, I think, like, what concerns me most is just like, it seems at this point that like a lot of people on Wall Street are literally not worried if people have money to spend. And I don't know what that means. Like, that's like a weird thing. It's all based on nonsense. I don't even really have a question. I'm just kind of like ranting right now. It just seems like things are more disconnected than ever. And I think so much of that has to do with, this is what happens when you actually get true believers to come in and just start slashing regulations because they just trying to help their buddies like make as much money as possible. The rest of us just stop mattering as much.
Mhm.
So I don't know what you guys think about that.
It's scary. Number one, it's like they talked about consumer spending and how it's continued despite what looks like a sluggish job market and inflation and everything like that. But then every single time when you really look at the numbers, it's like consumer spending is being driven by people who have a lot of money. And
Yes.
then when you look at the people who don't have a lot of money, they're not doing well. So like we're able to like talk about it, but I feel like it will take time to really look and see the impacts of what's happening on the rest of our economy when those people who are like teetering on the line just like fall off the line. And can
Hmm.
the higher earners still prop up like the rest of the economy? I don't know. I didn't cover the 2008 global financial crisis. I don't know what could happen when there's like a really huge shock like that that destroys half of the country, but the other half of the country is just like, "Oh, I already got out of this, so I'm still fine." Or not
Right.
half. I said half. That's not true. 1%.
Yeah. Right. Yeah. A lot less than
Right.
yeah. Right.
Yeah.
Yeah.
It's crazy, Layla. Just as you were talking, I looked up this like the stat, and it's that like 10% of earner of like the top 10% drives half of consumer spending in the country,
Right.
which is crazy. And it's like I feel like that's reflected just like my experience of like culture and like brands. I feel like there's just so many more things that seem marketed to people who are making a lot of money. Like everything is more expensive.
Mhm.
And I feel like it's just kind of everywhere. I don't
And then
know.
it's like, I can't remember like the statistic, but who is the top 10%? Like it shows kind of how little most of the people in the country have because I want to say the top 10% of earners don't even make more than $200,000 or something. I don't know if I'm right on that. Maybe I should Google it. But it's not as high as I expected it to be. So it's like you have a lot of upper middle class and above, and being like in the top 10%, which means 90% of people are really just kind of eking by. We're in these city centers like in New York and in the DMV and out there in LA, but the rest of the country in the middle, it's not even relatable. Like
Yeah.
what we're doing and earning and over here in these center pockets that everybody acts like it's the center of the world.
Yeah, absolutely. I'm looking here at I think top 10% if you're thinking in terms of like income is like 251,000.
Yeah.
Top 10% in terms of net worth is like 1.8, 1.9 million. So
Which
that's kind of
really
like
isn't crazy if you own a house.
no. No,
Yeah,
or if you
that's
have like
true.
a retirement. Like if you
Right.
have a 401k and you own a house, you kind of
Right.
get there pretty quickly in 2020. Not I don't want to say quickly. You'll get there in 2026, you know.
Mhm.
Like yeah,
Mhm.
exactly. I want to kind of set this up because, like TPM, in the past we haven't covered economics. That's one of the reasons I was so excited that we hired you, actually, Layla. But for our listeners, in case like you're not used to coming here for economic discussions, I just thought maybe I should set up like some of the things that I'm talking about that just feel ominous. Um, like there was an article literally this week, consumer sentiment at an all-time low. Okay, the 30-year treasuries, which is it's a bond you buy and you get your principal back in 30 years. The yield on those hit an all-time high. And what I want to explain is like why that's significant. First of all, not an all-time high. It was a high since 2007.
Mm.
That means that there's not a lot of people, or relatively not a lot of people, who want to buy the United States debt. And when people don't long term, so 30 years, that generally means what they're afraid of is that inflation is going to rise to the point where like they're not really making money on that investment. Usually when people are not buying bonds though, there's a correlated increase in the stock market. But what's been happening over lately is you'll have days where bond prices fall and so yields go up and the stock market falls, right? So what that tells you is that people are not buying bonds, but they're also not necessarily investing in the stock market. There's a term for that, and that usually is what's called stagflation.
Mm.
And that is when you have increasingly high inflation but you don't have a lot of economic activity and the stock market is kind of like stagnant because you don't have a lot of growth. And that puts the Fed chair in a difficult position because in theory, you lower interest rates and that stimulates the stock market and the economy. But if you lower interest rates, it also increases inflation. We already have inflation going up. We have a president who would prefer interest rates to be as low as possible, probably negative if he had his choice, they'd be negative. You'd get paid to put money, or you'd be paying to put money in the bank. And so all these things are happening at once. Stock prices of stocks currently, though, already are at all-time highs. And what I mean by that is the price you pay to own a share relative to the value of that share, just like how much money that company makes, all-time highs, right? All-time highs since they've kept that statistic, which started in 1999. So I'm setting this all up because we have a new Fed chair, all right, Kevin Warsh, and he has a really difficult job. And I'm curious, I want to hear from you, Layla, because I know you've covered this whole saga and his appointment. What you think about him? Like, is he going to be able to stand up to Trump? Because I don't even really know what standing up to Trump is going to look like because it's a really tough job. But like, what is your assessment of him? Because he might have like the hardest job, Fed chair position, maybe since Ben Bernanke in the financial crisis, but maybe even before that. This might be an even more tricky situation. So I'm curious, like, what you make of this guy.
So I've talked to a few different people about him, and I try to talk to people across the ideological spectrum because obviously different people are going to view him differently in light of that. And on the one side, maybe more people you would call progressive who've worked in Obama and Biden administrations, like they don't trust that he's going to stand up for Trump to Trump and he will stand up for Trump. They don't trust that he's going to stand up to Trump because number one, they said that his outlook on monetary policy, whether and when to raise and cut rates, has changed with the political times. They say that he's always flip flopping and that since I want to say early 2025 or late 2024, when it became clear that Trump would become the next president or was the next president, he started advocating for slashing rates because AI is going to improve productivity so much that you will see productivity raise and therefore there won't be as much inflation, even though we have higher output or whatever he said. And so they're just like, well, that's convenient that you feel that way as a president comes in who wants you to slash rates. So a lot of folks don't think that he will be able to set monetary policy independently of a president, which is really, really bad because of what you just stated. Political manipulation can crash the country's economy and make us have stagflation, inflation, everything like that. But then on the more right-leaning side and libertarian side, they kind of have faith in him because of something that I don't know much about. Maybe you do. Like that he wants to shrink the Fed's balance sheet because he wants the Fed to divest from its ownership in U.S. debt. Is that what it is?
Yeah. I could talk about that for a little bit after you finish.
Yeah. Well, I guess the last thing I'll say about that is, regardless of how people on the outside feel about him or whatever, he still is one of a several member voting board. And so he doesn't get to make a decision unilaterally. He's supposed to have a lot of sway because he's a chair. But since Trump has been attacking the Federal Reserve so much, some folks I talked to said they might be kind of insulating themselves now as members. They might feel like, well, we need to protect our independence. This guy doesn't like tell us what to do. And then you have the added element of kind of a second in history occurrence that Jerome Powell, who was the chair up until last Friday, is staying on as a governor. So I had folks tell me like he's just going to have a lot of sway. He's led the board. He's stood up for Trump. He stood up really strongly against Trump when Trump tried to have a criminal investigation against him. And so Warsh's influence, they expect that as long as Jerome Powell's on the board, it's really going to be pretty watered down. So I don't know. It seems kind of like he won't really have that much power to do anything. And anyways, Trump might try to fire him if he doesn't do what he wants. We'll see.
I wonder if Trump, if he fires him, if he'll try to like tell us that actually Hillary or someone like Joe Biden appointed him. I mean, that was like an amazing move. He's done it multiple times where he like pretends he didn't appoint, like he didn't appoint Powell, like as if he never met the guy, never knew who he was. Like you picked the guy, you know what I mean? It's so
Yeah,
nuts.
he arguably did that with like a whole year. Like in 2020, it was kind of a nightmare for everybody.
Yeah,
But like during the whole campaign, he just sort of pretended that like Joe Biden was president for 2020,
yeah.
which was sort of
What
like
was it?
it was kind of impressive, like
It's
how brazen.
scary because
Yeah,
it's just like he's all. I mean, we're talking about this stuff like it's real and like it's like but it's just made up every day. He just makes something up, and then we have to.
yeah,
I know.
It's not
Yeah.
funny, but it's just
No, but it is. Like this is the thing. This is what is so annoying. I mean, not to go off on a tangent, but like I just wish the guy stayed fucking hosting The Apprentice. Because he is funny sometimes. It's so
Totally.
irritating. It's so irritating. Like obviously the worst stuff is like all the harm and the
right.
and the people he's hurt and
Mhm.
all that stuff. That's what really matters. But there's a small like 0.5% of me who just wishes he was still hosting The Apprentice because it made me laugh. Right. And I'm allowed to have that.
It would have been better.
The quantitative, I'm going to talk about the quantitative. The libertarians love this stuff because they think that all of our problems are because of government intervention, and that the biggest issue in the world is that actually that the Fed bought a bunch of debt, the government debt, like over to raise interest rates, and that's the real reason for inflation.
Mhm.
And it's like it's not what's going on. And there was actually an article that was interesting. You mentioned Warsh and his belief that AI productivity is just gonna save everything. I'm not sure if you saw this. An article came out yesterday, I think, or Bloomberg, or a study came out. Bloomberg wrote about it that so far, at least, AI is extraordinarily inflationary,
Mhm.
because it's just nonstop spending,
Mhm.
and it's driving up the cost of goods that people need, driving up the cost of electricity, and so like I don't know when he thinks this productivity is going to kick in, especially when you see stories about a lot of the companies who are using a lot of businesses using AI most um uh, thoroughly are saying like we're not really seeing, we're not really seeing the benefits yet. So I don't know, I don't know what he's talking about or when we're going to see those, but I think we're going to see inflation a lot sooner than we're going to see, whatever dream if that even ever comes to fruition. That's like off in the future. So, um, I don't
Right.
know.
Which
I don't
makes
know.
them seem more political for saying it because
Yeah.
I haven't talked to or read one economist that's saying like we are already realizing like what AI has and can contribute positively to our economy. Everybody's like, who knows when that will show up. So for him to not only kind of tout it as what will happen, but then say it this early as if it's a reason to kind of be able to cut interest rates, which is what Trump wanted. It's just kind of like to me, it seems like a blatant posturing.
Yeah. 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 It's like when I think about it, I'm undecided. Like, I definitely think there's like a lot of posturing because it's sort of like posturing of, like you said before, of convenience. Like I can say this thing that I kind of hope happens, and Trump probably likes to see it. Um, but I also do wonder, like, I don't know, like these AI true believers who like think within 10 years that like nobody's gonna work and like robots are gonna be doing everything. Like to have if you have a guy like that running the Fed, you know that's pretty dangerous, right? Because that you're disconnected from reality. I think you mentioned you talked to a lot of people about AI, and I'm curious to hear more about that, like the variety of sentiment and kind of um I don't know if people are what maybe more bullish people are saying versus more negative people are saying, because I haven't talked to any economists about AI, so I'm curious kind of to hear more about what you've been hearing from them.
Well, honestly, like across the board, every single one that I've talked to is saying like it's just too early. They don't
Mm.
even think that it's shown up at all in like productivity measures, and they also don't necessarily think it's shown up at all in workforce and personnel. But then I kind of feel like, well, is that just like academics being a little behind the curve? Because when you see these mass tech firings, like I think Meta just fired 8,000 people yesterday, something like that.
Something like that,
Laid
yeah,
off
like a huge,
8,000
yeah,
people yesterday. And I think it was Jack Dorsey who attributed some of his layoffs directly to AI. It's like, well, I don't know if we can say it's way too early to see it at all and
yeah,
how it's impacting the workforce. But yeah, like everyone that I've talked to has basically kind of said it's like a wait and see game. And I don't know, it makes me think about Y2K. Like when everybody thought like the world was gonna end when the clock struck 12. And
Yeah.
yeah,
I'm like, what's the cutoff point for AI? Like, we need a date, actually.
yeah,
It's hard to tell also
yeah,
what's like, I mean, we talked about this on an earlier episode, but like what's marketing and what's real? Because if I'm like an AI company and they want to tell everybody that like my product is really effective, then I can just be like, it's going to take everybody's jobs because it can do everything, right? Like
Mhm.
it's sometimes when like you hear the people say like, this is going to end all white collar employment and all blue collar employment. Like it's like they're saying like their products are so effective that like everybody has to buy it. It's like a
yeah,
weird like way of like touting what they're selling.
Right.
yeah.
They benefit.
I
Yeah.
think one of the things with AI that I'm most interested in, and I don't understand it too well, is like I was trying to figure out what would happen if like is it the case that there can only be like one winner, basically, I think is what I'm getting at. Like, can you have OpenAI and Anthropic and Gemini all existing at the same time? And because like I don't really know, like, why do you need all three? Like, wouldn't isn't one gonna just become kind of like the dominant AI provider in the way that like Google became the search engine and Amazon became the e-commerce provider, and so on and so forth. And because you look at how much money is like invested in these companies like OpenAI, like $800 billion or whatever, trying to raise more, it seems like just one of those companies collapsing would kind of be like a too big to fail type event where you would need the government to step in and do something. And it's so hard un to untie all the ties to everything. Like one thing I was reading about that someone pointed out was like, if OpenAI doesn't even really need to like fail, um, imagine if they just can't fill all the data centers.
Hmm.
Like Oracle's invested like some insane amount of money in data centers, and they were like, these would just all this real estate would just sit empty, like no, not doing anything, and that alone is like a catastrophe. So I don't know. There's just so much money going into this stuff, and it's all speculative. And it's like we all know that the whole point of VC is like some people fail, they can't all win. And when all of the bets are enormous, I just don't know how that shakes out. I don't. Maybe nobody does. I don't know. It just seems ominous. It just seems very ominous to me. Like there has to be a bubble. Um, I don't know. Maybe not though. Maybe not.
I mean,
What?
maybe, but like if you think about it in relation to like the dot-com bubble, and I don't know, but it seemed like those companies, they were like brand new,
Mhm.
right? It was the kind of the first time. Is that right? Like these were brand new companies that were coming up. But now
Yeah.
I feel like
Yeah.
these ones that are related to AI, they've really been around at least since that dot com thing. So now we're investing in um, companies that have proven that they can innovate, that they can exist, and maybe they branched off and created this new facet that's directly related to AI. But it's kind of like a bit, to me, it seems different because these are like the Magnificent Seven. Like Google has Gemini, and
It's true.
Mhm.
so I don't know. I don't know. It seems a little bit different, and
Right. Yeah, I mean that's one of the weird things to me about Nvidia, right? Which is I guess they're not directly an AI company, but they're supplying the chips for it.
mhm.
but it's like they were a video game company basically for
Right.
their entire existence, right? And then now all of a sudden, in the past like 5 years, they become like the big AI
Yeah.
firm. It reminds me of that. Like, I have like a really weird anecdote about this, but anyway, basically, like you know that saying, during the gold rush, people who got rich were the ones who sold the shovels.
Yeah.
It's yeah, it's kind of like that, but like it just reminded me of this thing that happened when I was like covering the Trump trial a couple years ago. There was this guy who was like standing outside all the time, and he was trying to get into the trial so he could. What he said was that he wanted to. He was like a professional body language reader, and he was trying to sell his impressions of the judge and the jurors to professional gamblers, who were like trying to bet on the outcome in prediction markets. And then so we were people. I was asking about this, and then he used that quote that the people who got rich in the gold rush were the ones who sold the shovels.
I
Sorry, that
love
was
that quote though.
yeah,
That's a
it's so
great
funny. Yeah, it's a good quote, but completely tangential is what we're talking
yeah.
about. Anyway, I did want to ask you something. You wrote this great piece like a couple weeks ago about this is like off of AI, but like more towards like inequality, and like you wrote about how American workers are getting like record low compensation based on their
Oh
productivity,
yeah,
right?
this
So the harder they work, it doesn't really affect their compensation relative to their hours work, right? Their compensation either stays the same or goes down. Can you just tell us about that? Like, how is that happening? Why is that happening? You know, what has changed over the past several decades that has led to that, complete divergence?
Yeah, yeah. So the story was about like the BLS, the Bureau of Labor Statistics. They published this thing called labor share, a labor share report, and it showed like exactly what you said. Like people were taking home the lowest ever share of their output. And this is not just because productivity increased, because the report also showed that the amount of, I think it was hours, increased by 0.7%. So you literally are working harder and you're taking home less of that. And it's not just wages and compensation, also healthcare, whatever benefits are offered to you from your work. And so, like before we got on here, you had talked about this story, and I went and revisited the chart that was in it. And I talked to Professor Joseph McCartan. He related it directly to um, the labor movement, the decline of the labor movement, and workers having less leverage with their bosses. So then I went and looked at a chart, um, like chronicling union participation, union membership over the years, and you see that it declines in a really similar way to the way this labor share declines. So I want to say that BLS started taking this information in 1947, and that's the same year that a pivotal labor law was passed and union membership was kind of at its peak. And then as the union membership started to decline, um, the amount that workers could extract from their own labor from their bosses also declined. And I think it's obviously fair to say that in those same periods, um, inequality increased. So then what you have is like, if you look, you have this bump in 2020. It's like a pretty sharp bump where it looks like workers started like leveraging their power and they could earn a lot more. And what that was after the COVID pandemic, when people had received like, assistance, and uh, they couldn't work and everybody was laid off, but then companies needed to hire people back. Workers had a lot of leverage. They were able to finesse a much higher, base wages. And so that's literally reflected here in this chart. And then not long after, you see how long that lasted. Um, Now we're at a record low. The lowest ever compensation for your labor was just netted by us. So we're doing great.
yeah, this chart is whew, oh boy. Um we'll toss this up when we release the show, and if you're listening you should
Yeah.
watch on YouTube because we'll put it up, and Layla made a chart here using the data. But it's really stark and it's kind of like undeniable. And I'm glad that you mentioned, or I'm interested in that you mentioned the union piece, because I feel like that is I don't know. I feel like it's commonly left out of the discussion, or it had been for a long time. I think only it feels to me that only recently is within the past several years, really kind of, I think partly because of Bernie and AOC,
Mm.
has the union piece kind of come back. I think I think for a while it was kind of trendy to be anti-union, even no matter what side of the political spectrum you're on. Like, everyone's out there for themselves. Go get as much money as you want. This like sort of neoliberal viewpoint, so to speak. Um, and what you said about 2020 just like proves the point that like if wages are going to go up, it's going to be because the workers have more power
Mhm.
somehow. So how do you get them more power? And I would also say that just plug like TPM is unionized.
Yes, TPM.
TPM's unionized. Josh, the boss, accepted it real quick. We actually just we just finished like our another contract. So that's like breaking news. Nobody knows that. Nobody knows that, but we
It's
did.
true.
So heard it here first.
And you know what? I also want to add to that, like as we're talking about inequality. So at the same time that workers are getting less, right? We're not TPM because we're unionized, but at the same time as in general, workers are earning less for their labor, we have this record breaking stock market all the time. And it's just like, okay, well, fine.
Yeah,
Where is that
bingo.
money going then if it's not going to the workers? And this Wall Street Journal columnist, Greg Ip, he said is going to the wealthy, is going to shareholder dividends, it's going to capital expenditures, investments in those data centers, in AI, in R&D. And your labor is like fueling their wealth and you're getting less and less for it. It's just blatant. It's just so blatant. It's hard to talk about because it's just
Yeah.
like it's so overt. It's like what can you say about
Is
it?
this does is this data is for the way that you're thinking about workers' compensation? Is this only wages, or does this also capture if you're given like a share in a company or like some stock options or something like that?
It
Does that
captures
is it
benefits.
it captures so those kinds of benefits too? Yes, that makes it even more striking. But even if you factor in like the capital value that they're getting through their labor,
Hmm.
it's still not that. It doesn't end up being that much. One thing that's really striking me about that graph is that you can see the impact of the COVID era programs in it,
Yeah.
uh, which is that like in 2020, the government like stood up like this really extensive unemployment insurance for everybody. There were other benefits too, and you can see on this chart this like huge spike for like the basically like the welfare state that they expanded and set up that was like similar to what they have in Europe and other parts of the developed world. um, and it's just so striking to me that the policies are all there and they could be done if the political will existed to do it, and they have been done in the past 5 or 10 years. And
Right.
there was a crisis, but still, it's like this. These trends are a choice; like they could be reversed.
Hmm.
Also, if you think back to that time when these workers finally had some power, do you remember the headlines that were coming out? Like the things the business owners were saying? I mean, some of these people were saying, like, look, some people are going to have to die for the sake of economic growth. Like, we got to get back to the office. I mean, these are like
Yeah, it's
real
crazy.
quotes that real people were saying, and they weren't even like ashamed of it. They're like, look, and it was probably the most culty, the most like that the economy that the economy ever felt, right? Like it was this sense of like you have these people who really think that the economy is some kind of religion, like a beast that needs to be fed. And every once in a while, we're just gonna have to sacrifice some workers. Like I don't know, like, we had this pandemic, some people are gonna have to die because I need another yacht, and it was just like that direct and without any sense of shame. And it just like shows as soon as the people get a little power, these people panic and freak the fuck out because they can't make as much money as they want anymore, and it's not easy for them. Right, the whole idea of
Yeah,
being a business owner like is like you want it to be easy. This idea that everyone wants to compete, they have all this no, you don't. It would be way easier to run TPM if we were the only news outlet. I promise you. Like,
yeah.
you know, but
Although
we're not.
given the way digital media is going, that may end up being the case.
Yeah, yeah, that's true. That's
Well,
true. That's
like,
true.
yeah, there's absolutely capitalistic theory that's like people will die and that's going to be good for us. Like we
Yeah.
might need people to die. So it's funny when you have like modern day business owners, whether they know it or not, bearing out like the worst theories that you've ever read that are so hard to hear, but it's like That's what it is.
Yeah, it's just
Yeah.
like this is just how it is. Like they talk about it like it's gravity or something, like some sort of scientific natural force that
Yeah.
we just can't possibly harness or manipulate in any way.
Right. And that's the value of your reporting, Layla, is that like, yeah, Joe, everybody, they always talk about it as if it is just like nature, but no, it's not. It's like, it's choices that the government makes
Yeah.
to on how they're going to structure markets. And that's what shapes everything.
Mhm.
So it's all within, it's all, changeable. But the other thing I wanted to like, just again, go back to the chart, Joe, it's like, yeah, it's like we were talking about how like during COVID, all these like these business owners were saying, well, I guess people are just gonna have to go back to work. We're gonna have to get rid of all these benefits to increase the labor supply. But if you look at the chart, like the increase that happened around COVID was only enough to wipe out the losses in productivity for compensation that were incurred by the 2008 financial crisis.
Yeah.
Like that's the
Yes.
drop off. And so it's
Yeah.
only like 10,
Yeah.
15 years of
Yeah.
damage undone to that. And that was enough to cause this like huge panic. So
Mm.
Yeah.
it's just so shocking.
It's insane. It really is. Um, it's a good segue to talk about. Well, I don't know. Maybe the face, not the face of this evil. Maybe I don't know who the face would be. Elon could be the face, but Bezos would be in the discussion. And he had an interview on Squawk Box this week that was fucking wild, where he said some insane stuff, like crazy stuff that everyone should be aware of because it's crazy. Like this whole thing about how uh he said something like, look, you could raise my taxes, that's not going to help a nurse making $75,000 in Queens. Like, dude, yeah, it would, because it's up to us how we spend the money. Like, what are you talking about? Like, we could definitely make sure that it would help. And you can see them playing these games already where they're like, we should eliminate taxes for the bottom, for the 3% of people, the bottom 50% of and great. I would be all for that. Obviously, that'd be awesome if people making $75,000 who are nurses didn't have to pay taxes. Great. But what they're doing, obviously, is just trying to play this appeasement game where it's like, we want to lower all the taxes for everybody. And then we're going to lower government spending because, as he said, the real problem is government intervention. That's why the nurse makes $75,000. It's the government. It's not the health insurance companies. It's not these private equity firms that are buying hospitals. It's none of that. It's the Fed owns a bunch of bonds. That's the problem, right? So I don't know. Go watch the interview with Bezos. Everyone, you'll. I mean, you won't thank me. You'll be pissed off, but you'll be motivated.
Yeah, I'm so glad you said like playing these games because that's exactly as soon as he said that, like, why is this teacher first of all, he's like obsessed with Queens. I'm like, are they sitting in Queens right now? Why does he keep talking about a nurse in Queens? I don't get that. Then
Seemed like they were in an airplane hangar. I didn't understand the interview at all, but
they were at what Blue Origin's like
oh, is that what it was?
not
Okay,
studio. I
okay,
keep thinking the word studio, but Blue Origin, whatever, their big hub, which is I think in Washington State. It's on the West Coast. I'm like, I don't know why you're worried about what's happening in Queens, but
yeah,
whatever. Then like to playing this game, like this fake populism, which is the same thing that Trump did with the no tax on tips, with the no tax on overtime.
yeah,
Like you're pretending to appeal to the poorest people, but really you just want to extract their value, as evidenced in what we just talked about with regard to not earning any of your labor share. And then he talks about in Queens, Amazon pays people $23 an hour. Like he's obsessed with Queens. Okay, so they pay people $23 an hour. It's such a good job. And then he's like proud. That's $52,000 a year. Okay, well, I lived in New York for a little while, and then I went to the MIT wage calculator because I just wanted to see like, let's see what a great job he's doing in Queens. And the MIT wage calculator said that you needed more than $44 an hour to have a living wage in Queens specifically. So you don't even it just sounded like a 16-year-old took like their first theory of knowledge class and they're just like, wow, you need to find the root cause of the problems, you need to find them, nobody knows. Like nobody
yeah.
knows yet. It was the worst thing ever. I wouldn't recommend watching it. Joe recommended watching it. I
Well, because I liked it because he kind of like used all the tricks. Like you saw him use all the word games, all the like. One of my favorite things with these uber rich people is they deploy percentages or total amounts like as it suits them. So
Mhm.
like when talking about taxes, it's really helpful to say like we could just eliminate the bottom 50% of taxpayers because they only pay 3% of taxes anyway. Like who cares? But then when you're like, yeah, but why do you take like all so much of the why do you make 150 times 3 million times your workers? Are you 3 million times as
Yeah.
valuable as them? And then it's like, well, Amazon created $1 billion in wealth. It's like, that's not what I asked you, man. I
Right.
asked, why are you making so much more than the people that you work with? Not how much your entire company made. You didn't do everything at your company last year. You probably didn't do much at all at this stage. Um, and so it's kind of like, it was kind of like a roadmap. Like, here, if you analyze this, like if you watch it like film, like a football game, you go back and you watch Bezos, you'll see all the little tricks. That way,
Mhm.
next time you'll be ready for these fucking people.
It's trickery. It's
Yeah.
trickery. If you know, and I don't want to, a lot of people don't know. A lot of people don't have to know. Sometimes I wish I didn't have to know. But if you know, like, about these things, you know that I think it's like 40% of Americans, like a good chunk of people, because they earn so little for different reasons, they already don't pay like a federal
Right.
income tax. He didn't talk about which taxes he was referring to. It's just like, what are, like, taxes are so many things. What are you even talking about? And then I was like, you know what? It's our fault. It's our
Mhm.
fault, because why are we even asking him? He doesn't know crap about this. He's just a businessman. And that's what
Yeah.
happens. We just feel like we should ask rich people questions. And I'm sure they keep getting asked. They decide, maybe I do know. And they start,
Yeah.
well, you don't know anything about how to run a government or how to fund social services. You don't know anything about the tax code. You don't even pay your, well, you know how to avoid it. So it's just
Yeah.
like, that's our fault for even asking him in the first place.
Well, that's a good point, because he used one of my favorite little word games, which is that America is actually the most progressive
Yeah,
country in the United States, in the world, in terms of taxation. It's like, yeah, but it's like only on income tax. You don't even have income. You only pay capital gains. Your wealth just appreciates. Like, come on, man. Like, you're so fucking full of shit.
right,
Um. Anyway, it is
right.
what it is.
It's terrible. It really boiled my blood. I
Yeah.
regret watching it.
Um. Well, I guess before we let you go, you do cover other things for TPM besides economics. I think you've been covering stuff going on in Georgia, other places. What are some other things you've been covering that you're working on that people should go read, check out?
Oh, okay. Well, we just finished covering Tuesday's primaries. So the GOP primaries in Georgia specifically were kind of harrowing, because a few election deniers did eke out some wins. Um, there's like some runoffs there, so maybe there's some hope, kind of, but it's still super conservative. So but I've also been covering a bit of the impacts of Trump's cuts to healthcare. I covered like some things with regard to rural hospitals. I'm working on a piece about substance abuse and the impacts of his healthcare cuts and various changes to HHS policy on that. Cover some vaccine stuff. So it's just too much going on all the time. You
Yeah,
know?
yeah, a lot going on.
Yeah.
Yeah. Well, still, I mean, you do great work for us, so thanks a lot. And
Thank
yeah,
you.
thanks for coming on. This is really, really helpful. I feel like I
Yeah,
learned a
thanks a
ton.
lot,
So
Layla. We
yeah,
appreciate it. Everyone, go read all of her work and all the other work at TPM too. Listen to the podcast, everything. So, thanks, Layla.
Thank you.